Michael Cuggino joins us, portfolio manager at the Permanent Portfolio Family of Funds and the president. Hey, Mike, good to see you, sir.
Good to see you again, Oliver.
Let's talk some Trump 2.0 picks. You got some favorites here. What's most compelling, convincing? We kind of hit the macro discussion. Tell me about some of the micro here. What needs to be in the portfolio?
I really don't view them as Trump trades per se. I think they're a broad range of securities or stocks that would perform in a growing economy, regardless of probably which administration it is. But certainly the accent on probably more aggressive animal spirits growth, hopefully in the Trump administration, will make these stocks propel forward. So a couple of names that come to mind are, and I don't know, given the valuation run up lately, I wouldn't suggest them as buys at the moment. At least a couple of them because of the valuations, but I would wait for a pullback in a more longer term time horizon. Palantir Technologies on the software front, a company that's growing revenues, growing in the government space, growing in the commercial space, tied to the AI trade, tied to data analytics. It's had a big run lately, but we still think it has a lot more room to run as its market share grows going forward. Freeport-McMoran on the industrial materials side, kind of beaten down lately. It had a better run earlier in the year. We think that as the dollar comes down from the highs, as global growth hopefully resumes, and as the demand for copper, which we believe to be pretty strong in the next decade or so, outweighs supply, we think that Freeport's a good pick.
Hey, you're a gold guy. When you have got gold in the portfolio and then you put Freeport on, how does that affect the way you see the exposure to the precious metal? Freeport's kind of a proxy play, being a gold miner. I know they got a lot of copper too, but if you got gold as a separate part of the portfolio, how do you think about that relationship?
I think of Freeport as primarily a copper miner,
Okay.
but they do have a legitimate gold business. So,
Yeah.
As you mentioned, we like gold for a lot of reasons, and I can get into those in a second. But yeah, I mean, definitely it impacts, and the fact that Freeport has a gold business is an added benefit to it as a stock. They tend to do well in supply constrained markets. They run an efficient operation from a shareholder returns perspective. They do a great job with dividends, buybacks, increased dividends or special dividends. So we think long term it's a good total return holding. Another name would be Morgan Stanley in the financial area.
Okay.
Probably the most reasonably priced stock at the moment. And we think that the balance sheet's likely to remain strong. They got a good diversity of businesses in the financial markets arena. So a good total return pick. And again, still trading at reasonable valuations.
All right. Morgan Stanley, which has been kind of sideways since the pop post-election, though it does reflect kind of this overall strength in financials too. Regionals had a really good move post-election. That is, though, where I wonder, how much of this is policy, how much of this is kind of natural economic improvement in the backdrop for banks. Does there need to be real specific policy follow through to justify these bank trades, Mike, or they got enough wind underneath their wings already?
Well, on some of the regionals, I still am a little bit concerned with commercial real estate and potential loan losses. I know it's kind of been reduced as a risk factor, but I do worry especially with the higher for longer interest rates, which we appear to have here and may have. The refinancings that may have to occur, the decline in values of a lot of commercial real estate. I do worry more about the regionals. Whereas a Morgan Stanley, the bigger bank sector, the diversity of businesses, as I mentioned, whether it's basic banking, whether it's financial trading, whether it's asset management and wealth management, these areas I think are going to be more immune to some of those other more specific real estate types of issues that may affect the regionals.
All right, give me the last thought on gold and back to the precious metals. Gold versus silver, both part of the same trade, or you like one more than the other, Mike?
Like them both. Silver is always a little bit more volatile than gold. The supply is more constrained. There's more markets competing for the limited supply, whether it's industrial, whether it's jewelry, whether it's commercial. And silver is used in a lot of manufacturing processes, so it is somewhat of a proxy for economic activity. Gold as an alternative currency still remains strong. The dollar, has been really strong for over a decade now. We see it probably weakening over time. And that would be bullish for gold. The fact that the central banks around the world have been buyers of gold, the fact that the Fed is done raising at the moment, likely cutting, that's bullish for gold. The fact that gold is supporting some of these central banks that are frenemies of the United States and are potentially working on alternative payment systems that may be backed by gold to the US dollar. So there's a lot of reasons why we think there's a strong move for gold. And that doesn't even get into inflation or expected inflation or risk to the financial system, geopolitical risks, wars, et cetera. So I think it makes sense to have a healthy allocation to gold in this environment. And, obviously you wait for, we've had a little one here, but we think long term, figure out how much you need for insurance and buy it and hold it.
All right. Well argued. Like the stock picks too. Thanks, Mike.
All right. Take care. Anytime.
Yes, sir. Michael Cuggino, President, Portfolio Manager at the Permanent Portfolio.